Hello, everybody. So, as promised, here is my Sezzle stock full analysis video. This is actually a sponsored video, so I want to thank the Patreon member who requested it. Is Sezzle a BNPL champion? And is it too cheap? We are talking about buy now, pay later. This sector, of course, was very hot in the early 2020s. We had the merger of Afterpay with Square. We have Klarna. We have Affirm, and we have a player that kind of emerged at the same period, maybe a little later than the other ones. It is Sezzle. And Sezzle is the lesser known player in the sector, and it is especially lesser known in the United States because it's only about 6%? Yeah, very small penetration, 6% penetration in the United States for Sezzle. But this company Sezzle is actually a leader in other parts of the world, including Australia and Germany. They're doing very well in Australia and Germany. The stock was actually listed for quite a while on the Australian stock exchange, on the ASX. So this stock is doing better in Germany and Australia than it is in the US. And of course, before I go over the company, let me just briefly talk about buy now, pay later. So buy now, pay later, of course, is, I guess it will be people under 30 now. You know, I used to say it's people under 25. Now I would say all of Gen Z and upcoming Gen Alpha, they despise credit cards. They don't like credit cards. They've been taught not to use credit cards, you know, ever since high school age. And so this newer generation just doesn't do credit cards. They don't like them. And Sezzle and, you know, Afterpay and Affirm, all these companies, they're part of a disruption of the credit card company, the credit card business. And the way it works is you can see you have zero interest. Sezzle actually has a pay in 5 with zero interest rate in beta. So that's zero interest. And that's 4 payments, zero interest, and you can pay in 2, pay in 4, pay in 5. Up to zero interest, with zero interest, and it's every 2 weeks. And so, if you know, like in the United States, you know, your payments sync up. You know, most people get a paycheck every 2 weeks, so you can sync up your pay with paying off whatever you buy, and it's zero interest. Of course, you may ask, how is it possible to be 0% interest rate? Well, it's typically the merchant that sponsors the interest rate. It's an investment for the clothing company, the shoe company, the apparel company, hotels.com. They invest money. They look at it as an investment. They invest by sponsoring that 0% interest rate. And so instead of spending the money in marketing, they spend the money sponsoring things like BNPL. And this stock has grown very fast. They actually did a 6-for-1 split not too long ago. The stock is actually down from its highs, its July highs. It's actually down quite a bit. I'll get to that in a second. But the stock was 180 in July. We're back at 71. So the stock is down from its highs. So it's definitely a good time to start looking at it. And one peculiar aspect of this stock, of course, is how quickly it has grown. Year-over-year growth is 70%, 70.1%. And it looks like this year, you know, cutting it in half, it looks like this year, right now they're going at 67%. It looks like this year, year-end, they're going to be at 62%. So growth is decelerating slowly, but it's really not decelerating that much. So if you have growth, you move from 70%, say 65%. Yeah, this is a business which in 2030 might still have a 50% growth rate, right? Even if you like take off 5% in the growth rate every year, because you decelerate at some point, you know, the curve starts to look asymptotic. So you're going to decelerate growth. But I mean, the trajectory is still so early. We're still growing at 70%. It's going to take a while until this stock only grows at 30%. So this is definitely squarely a hyper growth company. And their size right now, is only 1% of the market, 1% of the total BNPL market in the United States. And you can see they have about half and half in store, half online. This is a company that does a lot online. They work a lot online. And they claim to have a better credit system than a lot of the credit scores, and they can, lend money super short term. They can lend money to a young generation who sometimes doesn't even have a credit score because, like I said, that's not part of the youth culture. And there you go. You have 49 million adults who are either credit invisible or unscorable. Credit invisible. So gone is the time where kids used to get a Sears credit card in order to build the credit. You have a bunch of youngsters who today just refuse altogether to enter the FICO system and the credit system, and this is why you have BNPL that's growing like this. But companies like Upstart, for example, they try to find an alternative to the credit score system. It's going to be very interesting to see the disruption of the U.S. banking if the credit score ever disappears. And why wouldn't you want it to disappear? Because they leaked all of the social security numbers, so that's also another aspect. Like a lot of young people are like, well, we all know about these leaks. They've been leaked. You remember the breach, the Equifax breach. Anyways, I ramble. I digress. But I don't see the future to be very bright for credit scores. I don't see the future to be very bright for credit card companies just because they're not recruiting the youth cohort. The cohort of the youth is not being recruited. So I just don't see a very bright future. And I think payment is changing, and BNPL with its 0% interest rate offering as a lot of appeal, especially to the young generation. And yeah, even though it's only over a 10-week period, 0% over 10 weeks, they love that stuff. They love it. Note how quickly BNPL was growing in the United States, 73% year CAGR for 5 years between 2019 and 2024. Now, the sector, they say, is only going to grow 13% from 2024 to 2030. I don't know how sandbagged that number is, but that number to me has to be very, very sandbagged. To me, BNPL is going to grow faster than 13% over the next 5 years. The little bit that I hang out in, online or in the shopping mall or the store, they have BNPL everywhere. Everybody advertises BNPL. It's all over the place. It's the GLP-1 of credit. Like it's a big deal. And of course, credit cards are going to be predicted to be on the decline over the next 5 years. And that, I believe, is going to accelerate, especially as, more and more people adopt stable coins. You may have seen like Cash App trying to get people to pay with the Cash App at stores, etc. Yeah, credit cards are on the decline. There's disruptions happening in fintech, and I think this is a story that I want to be a part of. I like this story quite a bit. Okay, talking about kind of how their system works. So they are going all in on subscriptions. Sezzle is trying to go all in on subscriptions. And, if they can't get a subscription, they still do some on-demand. And, direct integration, paying for at the point of sale. They have their on-demand. This is also a subscription, but you can use Sezzle anywhere you want to go. This is their $19 a month subscription. They also do on-demand online. They do on-demand at a few stores, but they're trying to get the youth to have a subscription in order for them to access 300 plus stores where they can do pay in full. And they have a suite of payments. So like I said, up to pay in 5 at 0%. And then the more long-term stuff, it's going to be an interest rate. An interest rate is going to be charged on that. And the interest rate is typically like in the 10-ish% range. So nothing like the rent-seeking interest rates that you would find in credit cards. And of course, this type of company, this type of payment prides itself on clarity. Every expense that you make, the app reassesses whether they want to lend you or not. You have clarity as to what you owe, when you owe it. And you don't have that convoluted situation with credit cards where a lot of youth sometimes gets trapped and they end up having with $20,000 of credit card debt. This BNPL, it's heavily criticized. Of course, people criticize it, but a lot of the reason for it to exist is to kind of avoid credit card debt and kind of move to a new system. They also are the first platform in North America that allows them to report. They allow their customers to report to credit history and to report to credit agencies. So Actually, Sezzle is a tool that can help you build a credit score without having to have a credit card. Not a credit card helps you build a credit score. So none of the traps of the credit card helps you build a credit score. I find that pretty compelling to the youth. And of course, let's talk about the platform. So it's a two-sided platforms, merchants and consumers. There's a consumer app, there's a merchant app. There's a merchant's API, and you can integrate at checkout at the API at the merchant side. And consumers, they have their own app, and they can browse all of the different websites that accept Sezzle. So consumers who want to spend with Sezzles are gonna look at which merchant accepts Sezzle, and merchants have an incentive to use Sezzle because Sezzle comes with, we'll see something like 700,000 subscribers or something like that. So I'll get to that in a second. 78% of people who use Sezzles are Gen Z or millennials. I think it's mostly Gen Z. Sezzle will help them build their credit score. And for the merchant, what's the value for the merchant? Well, you can see up to 57% increase in the value of the orders. A payback in under 6 months. Return on investment of 110%. Sponsoring that 0% interest rate. Embedding that at checkout. A lot of merchants have a big incentive in embedding that at checkout. I've read a lot of stories, especially in the apparel sectors, of merchants making so much more money after they allow the pay in full. All of a sudden, you increase your sales. You could up to double your sales. So merchants have a huge incentive to offer this type of service. It's a win-win. 0% for the customer, 0% interest rate for the customer, and less of a risk of a debt trap and more sales for the seller. It's a win-win. But make no mistake, it still leads to overspending. But that's kind of a business. People are gonna buy stocks. I spend too much on stocks. Some other people are gonna spend too much on, I don't know, Nike shoes and Bed Bath and Body Works and whatever, makeup, whatever. That's just the way it is. So again, so monthly on demand and subscribers is fueling growth, and it's all about the subscribers for them. And so, like I said, it's actually they actually have 568,000 active subscribers. But if you add the monthly on demand users, you can see it's 784. Monthly active users that you have access to, that whoever integrates Sezzles have access to. Next year, let's call it 1 million. So next year it will be 1 million people. Integrate Sezzle, get access to 1 million customers who spend more than the average customer and who are incentivized to shop with you. So anyways, bunch of benefits to your subscription. What is the subscription? So I did not download the app, because they want you to download the app to see the prices of the subscription, but I'll get to that in a second. So the subscription, you get access to 350 brands. Like I said, you have hotels.com, you have DoorDash. You can pay in for your DoorDash. Think about that. Paying for your Christmas meal or whatever. You get to skip payments, sometimes 2-3 reschedules. That's pretty interesting. That's much more forgiving than traditional credit cards. I found that pretty interesting. Get Sezzle to pay in full. So if you pay in full, you get 4% cash back. I found that pretty interesting. That's actually better than the Robinhood card. Now the problem is that you can't really use it anywhere. You have to go for these brands. But and they have exclusive discounts. So they're kind of creating the shopping addict's paradise. Like it's a shopping addict's paradise. It's an app for people who like to shop. Most of the people on my channel, I don't think, can relate to that. And I think most of the people on my channel don't like to shop that much. They prefer to buy stocks. But for some people, shopping is a hobby. That's the whole Pin Jojo motto. It's a shop friends fun. For some people, shopping is a hobby. So anyways, and if shopping is your hobby, well, Sezzle has something for you, which is $13.99. It's the premium subscription where you can access all of these stores, 350 stores for $13.99. You can do BNPL on 350 stores. And Sezzle Anywhere, that's $19.99. And this one, you get a Visa card. And you can just use it at all merchants. Any merchants, you can use it. So that's I think very very compelling for people who love to shop. This is an app for people who love to shop. So anyways, moving on. What else? They talk kind of about their backend. So there's a few notable things about the backend. They had a partnership with a bank, so they're getting into checking and savings account in the future. They're getting into cash advances in the future. So again, trying to own more of the customer, right? I mean, if the customer uses Pay in 4, why wouldn't you offer a checking account to the customer as soon as they turn 18 and maybe they get deposited their paycheck with you? So that's another aspect. And of course, they use machine learning. HIMS uses machine learning to better prescribe. Netflix uses machine learning to get you hooked on a show. They use machine learning in order to figure out who's going to repay and who's more likely to repay. And their model, they say, is already more predictive than FICO. And that does not surprise me. These models, in my view, will end up being much more predictive than FICO. And of course, when you do that, you offload some of the risk. You have better risk models. You can do more loans, etc., etc., etc. It's the loan business. I'm not going to get into the weeds of that. In my view, they take very little credit risk on, because it's on a purchase per purchase basis, right? You don't have a permanent balance outstanding. You don't have a permanent credit authority outstanding like in a credit card. Like a credit card, if they give you a $20,000 credit limit, you could have a customer who goes $20,000. Like that's much tougher to underwrite than underwrite it. Okay, well, they want to buy a $99 pair of headphones, $25 a month paying 4. That's very easy to underwrite, right? You don't have as much risk. So I think from a credit model, this makes so much more sense, because they can cut you off right away, right? It's not like a credit card where you have a lot of things outstanding. And anyways, companies growing very fast. Everything's growing very fast. Merchants are growing fast. It's just growing like a weed. This stock is growing like a weed. Like I said, 65% growth this year is what they're going to do. And let me conclude the video. A few things whenever I do a full analysis. So first of all, the stock price, much cheaper than it used to be. 281, now it's 71. Keep in mind, from the little bit I did research, of course I didn't look into it because, I don't like short sellers. But this company has been under attack from short sellers before. And of course, short sellers want to make a lot of money. And it seems like they've been able to make some money on Sezzle by publishing short reports. So again, I try to maintain my IQ and not read those. But keep in mind, if you own this stock, you could wake up one day the stock down 30% because there was another short report. By the way, short reports, it's a thing with the payment companies. There's always short reports, and I don't know why the shorts always attack the payment companies. Like you may remember dLocal, a relentless short report. You may remember the Cash App. Cash App, they literally attacked the Cash App, criticizing the musical tastes of the CEO, saying it was a reason to short the stock because Cash App was engaging in fraud or whatever. Keep in mind, these companies are targets from shorts, if the payment companies especially. Specifically speaking about Sezzle, there's 3 things that I find quite impressive about Sezzle. First of all, that's their second stock repurchase. They're repurchasing their stock. It means they think their stock is too cheap. Point number 1. Point number 2, my valuation. These are all of the payment plays. Out of all of the payment plays, I find Sezzle, you can read this line right here, I find Sezzle to be the most attractive. At enterprise value over gross profit over revenue growth of 0.15, rule of 40 of 111. That's the highest rule of 40 for that low of a price. Only Remitly is cheaper, but Remitly doesn't achieve rule of 40. So I'm very compelled when I look at that stock price. For Sezzle, I think it's way too cheap. That's point number 2. And point number 3, it's founder-led. And the insiders own 49% of the company, with the CEO owning 43% of the company. Talk about skin in the game. 43% of his company is owned by the CEO. I think the CEO wants to become a billionaire, a multi-billionaire, if I may say. And so that's always very reassuring when you see that. And it's founder-led. I listened to the conference call. Didn't get through the entire Q&A, but I listened for the conference call. They're going all in on subscription. It's all about the subscriptions for them. They want to be a subscription business, and they're pushing these $14 a month subscriptions, and that's where they make the most money. And it's a highly profitable company with EBITDA margin. Look at that, EBITDA margin 58%, right? So much higher than say a Remitly or even a Firm. So I like this stock very much. I don't know if I'm gonna buy because I have a lot of positions right now, and there's a lot of very inexpensive stocks right now. Unfortunately, growth in the market has not rebounded the way I would have hoped. But I definitely find this the most compelling play in all of the payment sector. To me, this is the most compelling one when I look at everything here. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.